What if I told you that nearly every real estate millionaire follows one simple rule, religiously? It's not flashy, it's not a secret hack, and it doesn't involve risky flips or overnight success. But it's the foundation that builds long-term wealth in real estate over and over again. In this video, I'm revealing the one rule that 90% of real estate millionaires swear by, why it works, how to apply it, and how it separates smart investors from those who crash and burn. Whether you're on your first deal or your 50th, this rule can make or break your financial future. Stick around, because once you understand it, you'll never invest the same way again. 1. The one rule. Buy for cash flow, not appreciation. Real estate millionaires know that chasing appreciation is gambling, but cash flow is predictable income. They don't buy based on hype, emotion, or dreams of skyrocketing property values. Instead, they buy properties that pay them every month, no matter what the market does. Even in downturns, positive cash flow keeps you afloat while others are forced to sell at a loss. It's not just about profit, it's about survival, scalability, and financial freedom. Buying for cash flow means the rent covers expenses and puts money in your pocket. Appreciation is the cherry on top, not the cake. Don't build your strategy on hope. If the deal doesn't cash flow on day one, real estate pros walk away. 2. What is positive cash flow, exactly? Positive cash flow is what's left after paying all your expenses from rental income. That includes the mortgage, taxes, insurance, maintenance, and property management fees. If your rent is $2,000 and your expenses are $1,600, your cash flow is $400 per month. That $400 is pure profit, and it adds up fast when you own multiple properties. Cash flow gives you income you don't have to work for, true financial freedom. It also protects you from market dips or unexpected repairs without sinking your finances. It's a buffer, a safety net, and the reason why long-term investors sleep well at night. Always calculate conservative cash flow before buying. Don't rely on future rent hikes. 3. Why new investors often ignore this rule. Many beginners fall for the glamour of appreciation or HGTV-style flip profits. They buy in hot markets hoping prices will skyrocket, but end up negative every month. They underestimate expenses, overestimate rent, and get stuck with money-losing properties. It's exciting to imagine doubling your money in a year, but it's not sustainable. Millionaires play the long game. They know steady cash flow beats speculation every time. Chasing appreciation is like investing in lottery tickets. Cash flow is like collecting rent checks. If your property isn't making you money monthly, it's a liability, not an asset. That's why 90% of successful investors stick to the boring, reliable math of cash flow. 4. The power of compounding cash flow. With just one cash flowing property, you might earn $300 to $500 monthly in passive income. Now imagine owning 10 properties like that, bringing in $4,000 plus per month, every month. Over time, you can reinvest that cash flow into more deals, growing your portfolio steadily. This creates a compounding effect. Your money is making money without extra work. Cash flow lets you scale without having to save for years between each property. It also helps you weather economic storms without selling off assets in a panic. Millionaires grow wealth slowly at first, then rapidly once momentum kicks in. Cash flow fuels the engine, and keeps the engine running through any market. 5. How to analyze a deal for cash flow. Start with the rent. What can you realistically charge, based on comps in the area? Then subtract all monthly expenses, mortgage, taxes, insurance, maintenance, and management. Don't forget reserves for vacancies, repairs, and capital expenditures. Use the 1% rule as a quick filter. Does monthly rent equal 1% of the purchase price? If it doesn't come close, it probably won't cash flow. Move on to the next deal. Always run the numbers conservatively. Assume high expenses and lower rent to stay safe. Successful investors kill bad deals quickly and only pursue ones that meet strict criteria. This discipline is how you build wealth, not by getting lucky, but by being smart. 6. The markets that support cash flow investing. Not every market is good for cash flow. Some are built purely on appreciation hype. Major cities like San Francisco or NYC often have high prices and low rent-to-value ratios. Instead, Look for affordable cities with strong job growth and reasonable property prices. The Midwest and Southeast are known for being solid cash flow markets. Think Cleveland, Indianapolis, Memphis, or Birmingham, not flashy, but profitable. Local economies with stable employment and low vacancy rates are ideal targets. Cash flow investors don't chase trends, they look for consistent rental demand and low overhead. It's about what the numbers say, not how cool the city looks on Instagram. 7. Why cash flow is the key to financial independence. Cash flow isn't just about making money. It's about buying back your time with enough income from rentals. You can quit your job, travel, or retire early. Real estate millionaires use cash flow to fund their lifestyle without ever touching the principal. They're not rich on paper. They're financially free in real life, month after month. Cash flow lets you live on your terms while your assets grow in the background. It provides stability, flexibility, and peace of mind. Things no paycheck can truly offer. When passive income exceeds your expenses, you're financially independent. That's the goal, and cash flow is how you get there. 8. Building a portfolio based on cash flow. Millionaires don't get rich from one massive deal. They build portfolios of small, solid winners. They focus on adding one cash-flowing property at a time, compounding their results. Each property adds monthly income, boosts equity, and reduces reliance on their job. They often reinvest profits into more deals or refinance to pull out equity safely. They treat it like a business, tracking income, optimizing operations, and planning long-term. A dozen $300 per month properties can outperform one high-risk $1 million flip. It's not sexy, but it's stable, repeatable, and proven to build real wealth. Success is slow and steady, not sudden and speculative. 9. Common mistakes that kill cash flow. Overpaying for a property is the fastest way to ruin your cash flow. So is underestimating expenses like repairs, vacancies, or management fees. New investors often forget to include long-term maintenance and capital improvements. They also assume rent will always be collected on time, which isn't always true. Taking on too much debt or using adjustable rate loans can crush monthly income. Cash flow killers are usually preventable, with proper research and conservative analysis. Don't skip due diligence or buy based on emotion. Stick to the numbers. Protect your cash flow like your life depends on it, because your financial future does. 10. How to adopt the millionaire mindset today. Start thinking like a pro by focusing only on deals that make you money now. Get comfortable saying no to properties that don't meet your cash flow criteria. Study your local market, analyze deals daily, and build a team to support your growth. Don't wait for the perfect time. Start small and build consistent habits. The rule is simple, but powerful. Buy for cash flow, stick to it, and success follows. That's how real estate millionaires are made, and how you can become one. The one rule that 90% of real estate millionaires live by is simple but game-changing. Always buy for cash flow. Appreciation is a bonus, but cash flow is what pays the bills, builds your wealth, and gives you freedom. If you're ready to invest smarter, stop chasing hype and start following the cash. Smash that like button if this helped you, subscribe for more real estate wisdom, and drop a comment with your biggest cash flow lesson or question. Your road to millionaire status starts with one smart, cash-flowing deal. Let's get to work. If you are serious about building income streams like we do in real estate, then Tube Mastery and Monetization is what we personally recommend. Link is in the description.